All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. Today is March 9th, 2026. And a lot happened while we were sleeping. Once again, oil had a crazy night. I don't even know where to begin. Over the weekend, we had all kinds of attacks against oil infrastructure on both sides, by the way. Israel hit the Iranian oil infrastructure. It was kind of scary. It was raining oil in Tehran, and street drains were igniting, flames coming up out of the gutters. Iran continued their drone attacks against UAE and Iraqi and Saudi infrastructure. And so all these countries are starting to cut their oil production. Over the weekend, we had announcements from Saudi Arabia, the UAE, Kuwait, Iraq, and Bahrain that they were all starting to slow their oil production because their storage tanks were just full. They had nowhere to send it with the Strait of Hormuz closed. So immediately upon trading beginning late last night, oil began to spike, and it didn't stop. It went as high as $120 a barrel, within striking distance of that 2022 high. And then around 1 a.m. Eastern time, it abruptly reversed course because the rumor broke that the G7 countries were considering tapping into their oil reserves. In other words, dumping the Strategic Petroleum Reserve, not just us, but everybody, as much as 300 to 400 million barrels of oil. And on that news, the price of oil immediately reversed lower, dropping $20, settling to where we're kind of at right now, right around $100 a barrel, but still up sharply, almost 10% higher than where we closed last week. Oil prices are volatile as all get out, and there is no end in sight to this volatility. So get used to it, guys. The macroeconomic types are going to be postulating at all kinds of possibilities. If this goes on this long, this happens. Right now, there's no end in sight to this conflict, and so it's only reasonable to assume prices are going to continue rising at this pace. And how high can they go before demand destruction happens? Unfortunately, we're all probably going to learn that. So there's a lot going on right now besides the dumping of the Strategic Petroleum Reserve again, and France getting in on it, the UK, all the European countries. There's also a lot of hopes riding on this Saudi Arabian pipeline. The Saudis considered this possibility that the Iranians might shut off the Strait of Hormuz. And years ago, they built a gigantic east-west pipeline that allows them to ship their oil out of the Red Sea. And between that and this UAE pipeline, they believe they can restore up to about 7 million barrels a day of flow. Now, that's not the 10 million barrels a day those two countries normally export, and almost 20 million barrels a day goes through the strait combined. But that's something that could potentially soften the blow, along with the dumping of reserves from the SPR, which is only a temporary measure, by the way. That only buys you time, and it's not going to last forever. And of course, once you do get the oil out to the west coast of Saudi Arabia, now you're in the Red Sea. And oh yeah, there's that other thing that happened on the water with the tankers in the last few years. Remember Houthi and the Blowfish in Yemen? Well, if we start sending the oil the other way around the Arabian Peninsula, the Houthis may have something to say about that. And they've got Iranian missiles and drones. Now, they've been quiet for the last couple of weeks. Will that continue? I guess like everything else, I guess we're going to find out. Now, as all this is going on, Axios broke the story late last week that the U.S. was considering seizing Kharg Island. That is an absolutely vital little piece of geography, arguably one of the most important patches of real estate in the world as it stands today. Kharg Island is an island that's only about 20 kilometers off the coast of Iran. 90% of Iran's oil flows out of that one island. Now, over the last week or so, Iran has still been able to export about 12 million barrels of oil. They've got about one tanker a day of Iranian oil is leaving through the Gulf. You've got some tankers, some carrying Saudi, Iraqi, or Qatari LNG, are deciding to try to run the strait. Some of them are getting hit, some of them are not. But the Iranians are actually sneaking some through also, mostly bound for China. And so the U.S. is considering seizing this island. Now, it's important because seizing an island, that requires boots on the ground, not quite a full-scale invasion of the country, right? Kharg Island is much smaller than that, but still, it would require boots on the ground. And I've maintained since the start of this conflict, at some point, somebody is going to blow up Kharg Island, blow up the terminal, the infrastructure there. I don't know who it's going to be, but whoever does it is probably going to come out the loser in this conflict. If we blow up Kharg Island instead of seizing it, say we try to seize it and we're unable to for whatever reason, we just decide we're going to blow it up. That means we don't think we're going to be successful in propping up another regime to replace the current Ayatollahs. And so we're just going to deny them access to that oil infrastructure. Conversely, if it looks like the Ayatollahs regime is going to topple and that they're going to fall, they don't want whatever regime that's going to come in to replace them to succeed. And so they might scuttle their own ship, blow up their own oil infrastructure in Kharg Island just to deny that revenue to the regime that comes in behind them. So I maintain that Kharg Island is vitally important, and whoever blows it up loses. We'll see how that plays out as well. Now, meanwhile, everybody's talking about the price of oil and what can't get out of the Middle East. We've got an interesting story out of China this morning. This Chinese chemical company, Wanhua, W-A-N-H-U-A, I'm sure I'm mispronouncing that, but Wanhua has declared force majeure because they're unable to get the chemicals that they sell into the Middle East in order to make things like polyethylene for plastic furniture and the like. So this is interesting because this is the first case of force majeure of things unable to get into the Middle East versus out of. And, you also have to wonder, okay, if things like chemicals to make plastic can't get into the Middle East, well, what else can't get in? Can food get in? Can other supplies get in? So we could be looking at a supply crisis across the board in these Middle Eastern countries if the strait stays closed. Meanwhile, South Korea is talking about imposing fuel price caps this morning. And in this article that they're talking about fuel price caps, they just talk about some of the rather crazy interventions in markets that South Korea has made over the last couple of days. We talked last week, the South Korean stock market just went apeshit last week. They had two of their worst days ever, one of their best days ever. Volatility like crazy. The memory stocks in particular were selling off. And apparently South Korea now has a 100 trillion won stabilization program. And if that sounds a little bit like central banks printing money to buy stocks, it's probably because that's central banks printing money to buy stocks. Never really where you want to be. And it looks like that's where the South Koreans are going here. So we got that going for us, which is nice. Meanwhile, we've got President Trump's sons are investing in a military drone company that is pursuing contracts with the Pentagon. And you'll forgive me if I call out people who sometimes mention something called the appearance of a conflict of interest. Let me just clarify. There is no such thing as the appearance of a conflict of interest. If it appears that there's a conflict of interest, it means there is a conflict of interest. But political types often refer to the appearance of a conflict of interest to make it sound like I'm so magnanimous that conflicts of interest don't apply to me. So I could understand how you plebs might think this looks like a conflict of interest, but I'm so awesome, and so it doesn't apply. That's bullshit. There's no such thing as the appearance of a conflict of interest. Just a thought here, but how about while your dad's president, you don't chase military contracts? I'm just going to throw that one out there because that sure appears like a conflict of interest to me. And by the way, if you're sitting there saying, oh, this is different, blah, 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 would you be okay if Hunter Biden was doing that while his dad was still drinking his prune juice in the Oval Office? And if the answer is no, it does make you a little hypocritical, doesn't it? We've got Oracle and OpenAI are canceling their plans to expand a Stargate data center project. I just love this story. This one broke late Friday. Remember Project Stargate? And I remember when that was announced early last year, I remember thinking Trump is going to regret this. You never want to get into bed with guys like Sam Altman and Larry Ellison and Masa Son from SoftBank. Well, apparently Oracle and OpenAI couldn't settle on financing terms. In other words, they didn't have the money or didn't want to spend as much money as the other guy. Whatever reason, they're canceling these plans. But interestingly enough, construction is continuing. Why? Because NVIDIA gave the company Crusoe that's building it $150 million to not stop construction, even though Oracle and OpenAI pulled out, while NVIDIA is off trying to convince Meta to jump in and fill the void. So once again, NVIDIA is paying the money to keep their revenue flowing, basically buying chips from themselves, all trying to keep this bubble inflated. And look, energy has always been one of the big limitations of this AI bubble. Has any of these guys like Tom Lee on CNBC, or I don't know, maybe Stacey Raskin, that sell-side analyst who told you to ignore me because I was a Twitter rando for years, have any of them run the numbers through their BS sell-side research to see what happens if oil goes to $300 a barrel or if natural gas triples from here? What happens to those data centers and their already non-existent profitability in that event? That's interesting. Nobody's really talking about that. And last but not least, we've got to make a pit stop at the private credit bubble to end the show, as we often do. Late last week, almost as soon as I wrapped up my show on Friday, we found out that BlackRock was gating redemptions in their flagship HLEN private credit fund. We were just finishing up talking about how Blackstone was doing the same thing. All the dark minerals are gating redemptions in their private credit funds because it's such a good investment that you can never get your money back. Guys, we got a lot to talk about today. Why don't we shrink my big melon of a head and let's see what's going on in the world of finance. Don't forget that like button and that subscribe button so you can have your coffee with the melon heads, because we do this every day. And you'll notice in the description down below is also links to George Noble's Best Ideas Stock Summit, where yours truly will be presenting on Wednesday this week, just 2 days from now. Well, right now the S&P 500 is down. It's down substantially, about 62 points, but it could be a whole hell of a lot worse. Well off our lows of the morning, down about 0.92%. The Dow is off 478 points, or about 1% lower ahead of the open. It was down more than 1,100 points at one point last night. So the Dow is rebounding as the price of oil corrected lower on that announcement of the dumping of petroleum reserves. Same thing going on with the NASDAQ, currently down 230 points, well off its lows of the morning, 0.93% lower, but still stocks are set to open down across the board. We've got a stronger dollar once again this morning, but off its highs, 23 basis points higher at 99.22. We have seen the dollar strengthen substantially since the beginning of this conflict. And we're also looking at bond yields are higher once again, but off their highs of the morning. The 30-year yield is at 4.786%, higher by 3 basis points. The 10-year yield at 4.154%, that's higher by 2 points and change. The 2-year is up almost 4 points to 3.594%, and the 1 month is at 3.701, unchanged for the morning. Looking over at Bitcoin, it continues to defy reality, in my opinion, trading at $68,399. It's up this morning somehow. You've got markets are way down, oil prices going vertical, and people are thinking, okay, let's go buy Bitcoin. All right, good luck with that one. But I would point out that we rejected that important technical level around 74,000 late last week. That was a bad indicator. I don't think Bitcoin is going to stay in this range much longer. Looking over at the commodities board, looks like metals are not liking these higher oil prices this morning. Spot gold is at $5,094. That's lower by $76, or about 1.5% lower. April COMEX gold futures are just above $5,100. That's down about $55, or 1% lower. Spot silver is at $84.32. That's down by a couple of cents, or 0.05%. Meanwhile, May COMEX silver futures at $84.46, higher by about 15 cents, or 0.18%. Nice quiet day for silver, which is what I want. I like the shiny. Copper is lower by 0.5%. Platinum is higher by 0.5%. Palladium is up about 0.2%. The big move is in oil, though. Now below $100. Currently at $99.48 for WTI futures for the month of April, after hitting a high overnight of $119.43. Currently higher by about $8.75, or about 9.6%. Oil was ripping earlier this morning. We'll look at that chart in a second. Brent crude is still higher by about 10.5% at $102.35. Natural gas is up another 2.9% this morning. Also something to keep an eye on, RBOB, your gasoline futures at $2.93. That's up like about 40% from where we were last week. It's up another 6.9% this morning. Higher gas prices are coming, guys. I don't think you need a PhD to figure that one out. They're already here in the futures market. We've already seen the price at the pump start to climb. It's going to keep climbing for a while. Now, here's a look at the chart so you can see what oil did today. Just an absolutely crazy candle we're looking at here. Again, when the oil market opened up, we went all the way up here, almost $120. And then here, I can show you guys if we zoom. Let's get rid of the squiggles I just drew there. And let's change this to 1 minute candles, and you can kind of see what happened overnight. We opened up and we just had a huge gap up as soon as they started trading last night. That was off of all that force majeure and all the shutdowns in the Middle East. The price continued to grind higher, and then around 1 a.m. Eastern time, let's see, where was 1 a.m. Eastern time? That'd be around here. That's when we got the announcement about the dumping of the oil reserves, and oil prices started to head lower from there, where we still reside now, currently below $100. Get used to the volatility. Just because they announced they're going to dump some oil from the SPR doesn't necessarily mean the top is in. That did coincidentally mark the top in 2022. So it could mark the top this time around, but I don't know. Call me crazy. I just don't think this conflict is going to be resolved in a couple of weeks. Also, Dutch TTF natural gas futures, that's another important energy indicator. This directly inputs to the price of electricity in Europe. That is up another 14.5% this morning at 61.15 euros per megawatt hour. We are near the highs that we've seen since this conflict started, that we hit Tuesday morning, and then we settled lower, but we're now pushing those numbers as well. Natural gas sharply higher in Europe since this conflict broke out. All right, now here's what sent the prices higher. We had this one late last night. Saudi Arabia starts oil output cuts as shut Hormuz fills storage. Saudi Arabia has started reducing oil production as the near blockage of the critical Strait of Hormuz starts filling up storage tanks, according to a person familiar with the matter. The move by the kingdom, the world's biggest oil exporter, follows the United Arab Emirates, Kuwait, and Iraq, not mentioned Bahrain. We'll get to them in a minute here. The war in the Middle East has all but closed the Strait of Hormuz, the narrow waterway linking the Persian Gulf to the open seas, to maritime traffic following Iranian threats to shipping. That's clogged up exports from major producing countries, sending oil sharply higher and rippling through the global economy. And we did mention Bahrain. We also got this one. Bahrain's BAPCO announces force majeure on operations. This one hit about 2 a.m. Eastern time last night. Bahrain's BAPCO has declared force majeure on its group operations on Monday following an attack on its oil refinery complex, the company said, as the conflict in the Middle East continues to disrupt oil production. BAPCO's 380,000 barrels per day Citra refinery buys Saudi crude via a pipeline between the two countries, depriving of Saudi Arabia of another outlet for its production. BAPCO is a major exporter of fuels, including diesel, jet fuel, and naphtha to countries in the Middle East and Asia. All right, so as that is going on, that's all the oil disruption. And then I guess the world leaders just decided they'd had enough. The economy was looking shaky. We've already got bad jobs. We've already got inflation higher than we want. Now oil going to $120 a barrel. That's enough. G7 to discuss joint release of emergency oil reserves. They are tapping into the savings once again. It's the second time in 5 years, by the way, 4 years. The group of 7 finance ministers are set to discuss a possible joint release of oil reserves on Monday. That's according to people familiar with the matter, as the Middle East war chokes flows from the region and sends prices soaring. France, which holds the G7 presidency, initiated plans for the call, scheduled for around 1:30 p.m. in Paris, said the people who asked not to be identified, discussing private deliberations. The French government said in a statement that the use of strategic reserves is being considered. Financial Times first reported the call and said the U.S. supported the idea of jointly releasing oil reserves. The people familiar with the matter cautioned that no decision had been taken. The move would be coordinated with the Paris-based International Energy Agency. Coordinated drawdowns of strategic stockpiles have been carried out only 5 times before, twice in response to Russia's invasion of Ukraine in 2022. Prior to that, reserves were accessed following supply disruptions in Libya, Hurricane Katrina, and during the first Gulf War. The Financial Times cited one person as saying that some U.S. officials believe the joint release in the range of 300 million to 400 million barrels, or around 25 to 30% of the 1.2 billion barrels in reserve, would be appropriate. All options are on the table, according to the IEA. Officials who asked not to be identified said. All right, so let's take the high end of that, 400 million barrels per day. Even that, if we're talking about trying to replace 20 million barrels per day that comes out of the Strait of Hormuz, that's really only, 400 divided by 20, That's about 20 days worth of oil disruptions through the Strait of Hormuz. Now, you can extend that through things like pipelines in the other direction and ships that are trying to run the blockade. But really, the best we can hope to do here is cushion the blow. I don't think this is going to be enough to totally arrest the trend. Now, one of the other things that they're trying to do to try to get more oil out of the Middle East is the use of some of these pipelines. This one from Javier Blas and Bloomberg, the oil pipelines that could decide the Iran war. Iran's strategy in its war with the U.S. and Israel is by now clear: impose an intolerable economic cost on President Trump, forcing him to abandon his war of choice as American gasoline prices surge. You can notice some signature partisan wording from Bloomberg there. Yes. And inflict pain on Donald Trump and his war of choice, not inflict widespread economic malaise on every human being on the planet. You notice the word choice here is important, but I digress. Is there any way the Islamic Republic's blueprint for survival can fail? Yes, if its old regional nemesis, Saudi Arabia, can cushion the oil market. Enter the East-West Pipeline, a 1,200-kilometer, 746-mile conduit crisscrossing the Arabian Peninsula from the Persian Gulf to the Red Sea. I don't even know how to say this. It's raison d'etre. Did I say that right? Is to meet this historic moment, Iran's closure of the Strait of Hormuz. The Saudis built it 45 years ago, thinking that one day Tehran would manage to do what was always considered unthinkable and halt shipments through the narrow waterway. The strait is a choke point for about 20 million barrels of oil a day of crude and refined products, equal to about a fifth of global consumption. The Saudi pipeline can't offset all of that, nowhere near it, but it can provide a workaround for as much as 5 million barrels per day. Another pipeline, which is owned by the UAE, offers a separate bypass option to the Gulf of Oman for 1.5 million barrels. In an emergency, the UAE can probably push that close to 2 million barrels. So together, these pipelines can slow, though not stop, runaway petroleum prices if both countries can get enough tankers into the loading ports where the oil ends up. Right now, about 25 super tankers, each capable of loading about 2 million barrels, have diverted from their original destinations and are now headed toward the new pickup points. It remains to be seen how the ports will cope with these armadas. All right, so we've lost about 20 million barrels per day of flow. Say about 2 to 4 million barrels per day is still running the blockade in the Strait, and they think they could maybe get another 7 through these east-west pipelines. Combine that with the 400 million barrels that they're dumping from the SPR. They're trying to buy time here. They're trying to buy a couple of months for this situation to get resolved. Now, again, the big question here is all that pipeline, all right, it's going the other direction. You still have to get past the Bab el-Mandeb Strait or the Suez Canal. You have to get within range of the Houthis and their missiles. And also those pipelines, 750 miles across the desert, those are targets of opportunity for the Iranian drones as well. So this is an option, but it's not necessarily a fix, and we're not even sure this is going to work. Meanwhile, we got this one in the Maritime Executive. The White House is considering a raid to seize Kharg Island. We had mentioned how about 12 million barrels of Iranian oil has still managed to get out of the strait over the last week or so. Well, now we've got this one. The Trump administration is contemplating a series of special forces operations inside of Iran, potentially including a raid to seize Kharg Island. That's according to Axios. Kharg is home to the crude loading port at the heart of Iran's oil export industry. Kharg Island is located at the far northern end of the Arabian Gulf, opposite Kuwait, and about 20 nautical miles off the coast of mainland Iran. It handles the overwhelming majority of Iran's crude exports, and by nameplate capacity, it is rated for moving far more than the current Iranian national output. Its primary customers are privately held refineries in China, which consume the overwhelming majority of Iranian crude. And they're showing here the southern tip of Kharg Island. This is where almost all of Iran's crude exports flow out of. This is important. Through all the bombings, every time Israel has hit Iran, every time we have hit Iran, we've always been very hesitant to hit this island, even though it's the single most valuable piece of infrastructure in Iran. Why? Because if we hit this island, it's going to drive oil prices even higher. The only reason we would hit this island is if we didn't think we were going to be successful in toppling Iran's regime. So if we blow it up, it means we're probably losing the war. Conversely, if the Iranians blow it up, it means they're probably losing the war because whatever regime is about to take their place, they wouldn't want them to have the Iranian oil. So Kharg Island is very important to watch. If we seize it, that's different than blowing it up. Of course, if we seize it, then the Iranians might rather blow it up rather than lose it. It's a mess. It's a total mess, guys. And we're not just talking about oil here. This is one of the first knock-on effects that we've seen in other industries. This is how a rising price of oil turns into widespread economic downturns or even recessions. Now, this time it's affecting China, but you better believe that this is going to affect industries in the United States also. China's Wanhua Chemical declares force majeure on supplies to the Middle East. And that's important here, supplies to the Middle East. They can't get the stuff into the Persian Gulf. China's Wanhua Chemical has declared force majeure on supplies to the Middle East customers, a company representative said on Monday. The force majeure, a provision in a contract that relieves parties from their obligations because of an extraordinary event, came into effect on March 7th, according to a letter Wanhua sent customers, as seen by Reuters. We are facing the severe disruption of shipping routes in the Strait of Hormuz, making delivery impossible of unreasonably dangerous. The petrochemical major typically sells some of its derivatives, such as isocyanates, a building block for polyurethane products used for bedding, furniture, and automotive interiors, to the Middle East traders said. So now you can see, because of what's going on in the Strait of Hormuz, it's not just affecting oil, it's affecting this chemical company in China. Their sales are going to go down. So you're going to have shortages of, what are they talking about? Bedding, furniture, automotive interiors. You can see how it would spread to other industries from there. Meanwhile, South Korea is just going absolutely bonkers. Oil shock prompts South Korea to impose fuel price cap for the first time in 30 years. Now, it's not just South Korea that's playing with price caps. There was also an article today that the Chinese are increasing their pre-existing price cap, so they're raising theirs. So this isn't exclusive to South Korea, but some of these things are. South Korea is set to impose a price cap on fuel products for the first time in 30 years as oil prices skyrocketed on Monday due to the war in Iran. And we all know how well price controls work, right? Price controls never lead to shortages or hoarding conditions. Note sarcasm. In a briefing on Monday, President Lee Jae-myung said that the government will swiftly introduce a fuel price cap, adding that Seoul will explore ways to diversify its energy import sources, according to a TV broadcast. Now, okay, the fuel price caps, I get why they're doing that. It's not going to work, but I get why they're doing that. But that's not the only thing South Korea is doing to manipulate markets here. Over the past week, the country's benchmark Kospi has seen wild swings, marking its worst day on record on Wednesday with a 12% fall before surging 10% again on Thursday and falling again on Friday and Monday. In the 4 sessions, multiple trading curbs on futures were enacted, and the Kospi saw circuit breakers enacted twice. All right, so curbs on futures, circuit breakers being tripped, fuel price caps, but wait, there's more. Lee also called on authorities to actively expand the 100 trillion won market stabilization program, if needed, and proactively prepare additional measures at the government and central bank levels. The stabilization program ordered by Lee last week was launched on March 6th and was designed to calm capital markets. All right, a market stabilization program. Okay, so proactively prepared, measures from the government and the central bank. If that sounds like printing money to buy stocks, well, I forgive you for thinking that, because that's sure as heck what it sounds like to me. However, the Korean Economic Daily reported that South Korean president is saying that the program was not designed to artificially prop up stock prices, even though that's exactly what they're doing, warning that authorities must avoid pushing equities in a way that distorts the market. Good God, what is going on over there? Now, take a look at the Kospi index. This is the South Korean exchange, all over the place. Now, this thing had gone vertical because of what was going on with chip stocks and memory prices, but 2 of the worst days in the exchange's history, followed by one of the best days in the exchange's history. Now we're kind of right back in the middle of where we were on Wednesday, down 6% again today. Also, note that 50-day moving average is kind of where we bottomed out today. South Korean stocks volatile as all get out, despite government with their thumb on the scale. All right, and we got to talk about this one, guys. And again, this is treading a little bit too much into the political spectrum, but I can tell you I'd be pissed off if I found out Hunter Biden was doing this. So I'd be a hypocrite if I didn't cover this now. Trump's sons back new drone company targeting Pentagon sales. Power US says it plans to acquire Ukrainian drone tech to sell to the U.S. military. And do you think maybe it might appear to be a conflict of interest if somebody at the Pentagon was pressured to buy drones for the U.S. military being sold by a company invested in by the president's son? Does that appear to be a conflict of interest? Well, maybe it appears to be a conflict because it is one. Eric Trump and Donald Trump Jr., the president's sons, are backing a new drone company that is vying to meet fresh demand from the Pentagon and fill a hole left by the administration's ban on new Chinese drones in the U.S. Power US, a drone roll-up based in West Palm Beach, Florida, is merging with a publicly traded golf course holding company backed by the Trumps, Power US executives said. That is a reverse SPAC merger. What does military drones have to do with golf courses in Florida? Nothing whatsoever. The reverse merger will result in Power US, which was formed last year, trading on the NASDAQ in the coming months. Also, coincidentally, reverse SPACs allow you to get around a lot of the S-1 filings and regulatory requirements to open up your books. Very convenient there. Investors in the deal include one of Trump's investment vehicles, American Ventures, and Unusual Machines, a drone components company, where Donald Trump Jr. is a shareholder and advisory board member. The company said Power US is also a customer of Unusual Machines. The Trump brothers-backed investment bank Dominari Securities, which has been involved in the family's crypto deals, is also involved in the transaction, the company said. And separately, asset manager, the Korea Corporate Governance Improvement Fund, has invested $50 million. Again, if it looks like a conflict of interest, it is one. Oh, and you didn't think we were getting through a full stream without talking about the AI bubble, did you? Oh, this news on Friday. It's happening, everybody. Remain calm. Oracle and OpenAI end plans to expand flagship data center. That gargantuan project in Texas, well, it just got a little less gargantuan. Oracle and OpenAI have scrapped plans to expand a flagship artificial intelligence data center in Texas after negotiations dragged over financing and OpenAI's changing needs. Nobody wanted to fork over the money to pay for this thing. The collapsed talks create an opening for Meta platforms, who never really cared how much money they burn over at Meta, to step in and consider leasing the planned expansion site in Abilene, Texas, from developer Crusoe, according to people familiar with the matter. NVIDIA, the leading AI chip maker, helped facilitate Meta's discussions with the developer, said the people who asked not to be identified because talks were private. They helped facilitate, wink, wink. The shifting plan underscores the complexity of building out AI data centers, which are expected to cost in the tens of billions of dollars and require cooperation from a wide swath of partners. The campus being developed by Crusoe in Abilene is part of the highly publicized Stargate project, which was announced last year at the White House with President Trump. While the 1,000-acre site continues to be built and several parts are up and running, Oracle and OpenAI elected not to go forward with tentative plans to lease a large expansion, the people said. Oracle and OpenAI are using NVIDIA's AI semiconductors at the Stargate site. With Crusoe seeking a tenant, NVIDIA became involved to ensure its products would still fill the expanded data center rather than that of rival AMD, said the people. NVIDIA paid a $150 million deposit to Crusoe and began helping court Meta as a tenant for the expansion, the people said. Now, let's get this straight here. NVIDIA really wants to sell their chips to this data center who now doesn't have a tenant. And so NVIDIA gave the people buying their chips $150 million just to buy them time so that they still buy the chips while they hopefully convince Meta to come in and lease out this space that OpenAI is now not going to lease. This is another example of NVIDIA buying their own chips one way or another. It's another example of round tripping. Even as two of the biggest players, Oracle and OpenAI, pull back from this bubble, mostly because they're running out of money and they all lose money left and right. NVIDIA forking over more of its own cash to blow into the bubble to keep things going. Well, NVIDIA stock currently down 0.77%, trading at $176, pretty much where it's been for the last 9 months, still going a whole bunch of nowhere at the lower end of this band they've been trading at since August of last year. Full disclosure, I am short NVIDIA. And last but certainly not least, we've got to touch on private credit. This was big news Friday. This story actually broke right in the middle of my stream on Friday morning. And in case you guys hadn't heard this one yet, BlackRock and their $26 billion private credit fund limit withdrawals. And I know this may sound like a story we've already covered because we covered the exact same thing with Blackstone last week. And there were several stories about BlackRock taking big losses on some of their private credit loans, some 100% when they had previously been valued at par just 3 months ago. But this is a totally different story. And these things are coming in like crazy here. BlackRock has curbed withdrawals from one of its biggest private credit funds after client requests for redemption spiked, the latest sign of investor anxiety about the $1.8 trillion private credit industry. The firm's $26 billion HPS corporate lending fund, one of the largest non-traded business development companies, said in a statement Friday that shareholders had requested 9.3% of their shares, but management decided to cap the repurchase at 5%, while the total value of shares would have been about $1.2 billion. BlackRock said the step is in line with its existing management of liquidity for the flagship direct lending retail product known as HLend, and a foundational feature of the investment. They're trying to say this is normal. Without it, there would be a structural mismatch between investor capital and the expected duration of the private credit loans in which HLend invests. And they're right. There is a big-time duration mismatch between the liquidity needs of the investors and the maturity of these loans. And that's why these funds were a stupid effing idea to begin with. This was always going to happen. And now people are surprised when it happens. Last month, the non-traded BDC offered to tender as much as 5% of its shares, as is typical for such entities. It faced withdrawals of about 4.1% in the prior period. BlackRock shares fell as much as 8.3% on Friday, while the stocks of alternative asset managers, including KKR and Ares Management, also swooned, and they're off to their worst start of the year in a decade. Private credit continues to melt down here. Guys, private credit is not garnering the headlines. Everybody's looking over at oil. That's getting all the attention. But it's also worth pointing out, as oil goes to $100 or even $120 a barrel and continues rising, that is going to put further stress on the companies that underlie these private credit funds. It's going to make it even harder for them to service their debt costs if their oil prices have gone up, and oil is an input to freaking everything one way or another. So the situation in the Middle East, even though it's distracting from the headlines, it's going to make the underlying problem even worse for both private credit and for the AI bubble. So it's going to be great. You're going to love it. And I just want to say thank you very much to T.A. Chapman for what is surely a terrible idea, T.A. Chapman. He says, President Jack of the Melonhead Clan, can you end this time change BS already? Happy Monday, y'all. Like and sub. Well, I'm Jack Gamble, and I approve this message about the like and sub. I don't mind daylight savings time so much. I mean, I was all messed up yesterday from the time change and everything too. But you know what? I'm over it. And when 6, 7 o'clock rolls around and it's still light outside, you can still get some yard work done. I don't mind daylight savings that much. I actually like it. I am a true contrarian. I'm one of the few guys left on the planet who still likes daylight savings time. I know. Don't shoot. But thank you, T.A. Chapman, for supporting the channel, sir. Espresso Beanies 8930 says, I don't get boots on the ground over naval escorts. I don't particularly like either option. All right. Naval escorts. I don't like the idea of U.S. destroyers getting within 20 miles of mainland Iran to escort tankers that are probably sending oil to China or India. I don't like it. Our Navy is doing a superb job. But when you go right up to the coastline, and if you're going to traverse the Strait of Hormuz, you geographically, you are right there. You're broadside, and the Iranians haven't really fired many of their anti-ship missiles yet, and they have them. And when you're firing an anti-ship missile from only about 10 or 15 miles away, no matter how good the Aegis system is, no matter how good the interceptors are, you've got seconds to intercept that missile. And so the odds of a U.S. ship getting hit go up dramatically if we're going to go run the Strait of Hormuz doing escorts. And that's likewise, even if they don't hit a Navy ship, if they hit one of the tankers that we're escorting, well, then the price of oil is going to go vertical anyway because people are going to panic over that. So I just don't think escorting convoys through the Strait is a good idea at all. I also certainly don't like boots on the ground either. I don't know why we would seize Kharg Island. Why not just turn back the tankers? We seized all the tankers in Venezuela. Why are we letting Iranian tankers get out of the Gulf and when we didn't allow Venezuelan? And if you answered because the Chinese Navy is probably going to have something to say about that, well, congratulations, you're paying attention. Let's only fight one war at a time. What a concept, right? Thank you, Espresso, for supporting the channel. My man, Travis from Real Estate Mindset says, great show. Thank you, Jack. You are most welcome, Travis, and thank you so much for supporting the channel. I appreciate that very much. Everybody, check out Real Estate Mindset while you're here. That is my buddy, Travis. Great channel, follows the housing market very closely. And he's fighting the good fight on property taxes over there as well. Thank you, sir, for everything you do. And thank you, everybody, for having your coffee with the melon heads this morning. Keep those gas tanks full, folks, because it ain't getting any cheaper anytime soon. Thank you so much for the super chats. Thank you, Freckles. Great show on a crazy morning, busy morning for the mods, I imagine. Just want to point out I wasn't part of the problem today. Thank you, Freckles, for not being part of the problem. I appreciate that very much. Don't forget that like button and that subscribe button. Thank you for all the super chats, guys. Thank you to my magnanimous melonheads on YouTube, Patreon, Buy Me a Coffee. Links down below, along with that link to George Noble's event on Wednesday. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.